Hello investors and traders, and welcome to this week's episode of Technical Tuesday, where today I'm going to be covering evening stars and morning stars. Before we get into the details of what those candles are like, I'm just going to do a quick review to talk about hammer candles and shooting stars. We already have a Technical Tuesday video out for you to reference, and I'll put the link in the description box below so you can go back there and check that one out. First and foremost, a hammer candle is when you have a small body candle like we have right here with a long shadow under the candle that's at least 1.5 times the length of the body. That tends to be bullish. 80% of the time when you see a candle like that show up, guess what? The stock will most likely rally. A shooting star is the hammer more or less turned on its head, but placed at the end of an upward leg. And you could see right here, as I scroll back, you could see a shooting star right at the top right there. And so that is a small body candle with a shadow above the body, and that tends to be bearish 80% of the time. Now, if we take a look at Freeport-McMoRan, ticker symbol FCX, you'll see right back here, let me zoom in there for you so you can see this. You see a small body candle, and that is after the price had gapped up. So on day one, it gaps up. The very next day, it gaps down. Now, it doesn't have to look like a shooting star with a long shadow above. It just has to be a small candle. It could be a spinning top. It could even be a doji. But the important part is that it gaps down right after it gapped up. And so this is what it looks like. And generally, it's not a major bearish reversal. It's just a bearish signal that will tell us that the price is most likely going to continue lower. Now, these types of candles, the evening star and the morning star, are not common. They're in fact very rare, but when they do occur, you got to pay very close attention to them. And you can see what happened here. Obviously, Freeport-McMoRan continued lower. Now, if we look at another familiar stock to many of you is CCL, it's Carnival Cruise. We'll take a look right here, and you can see the morning star. You see that? So it gaps down. Right here, it gaps down. Very next day, it gaps up. And what happens after that? It continued to go higher. Now, it doesn't look like much on the chart, but it went from around 22.5 all the way up to 30 in a matter of 2.5 to 3 weeks. So for an option trader especially, these are very important signals because you want to capture the move when the move is taking place. You don't want to be late to the party, so to speak. You see, so again, this would be more of a hammer right here. You could see that there is another type of a hammer here, long shadow underneath. This is more of a shooting star. Again, go back and review the video that I have from Technical Tuesday for hammers and shooting stars. Now, when you're trading them, let me go back to where this morning star is. How do you trade that? Well, you want to wait for the very next day, because you're not quite sure that's going to gap up. It could gap down, but it might not gap up the next day. So what you're doing is you're buying on the pivot here. And as soon as you buy, whether it be an option trade or an equity trade, you're putting an exit price somewhere below of the lowest of the candles here. Remember, a morning star is a 3-candle pattern, and evening star is a 3-candle pattern. They just found at opposite ends of the trading leg. So the morning star down below, this low of that candle is where you're going to be managing risk. Now, I sometimes put a price alert. I don't use stop orders in the way most people are taught how to use stops. I'll look at a price, I'll get the alert fired off, and if it looks like it's going to close below that low, then I will take action and close out of the position. All right, that's how I do it. Not everyone does it that way, but I'm just telling you how I'm trading. I obviously can't give you advice here on YouTube, but I could certainly tell you how I'm trading these. Now, if we look at Ethereum, the ticker symbol ETHE. Once again, you could see that if you have an evening star, let's say this is very close to an evening star here, you're going to be taking the position after the gap. Now, that's a pretty significant gap, but as you can see, after it gapped down, it continued to go much lower, right? It dropped another 8 points after this gap, so that's almost 30% of the price of the stock in a very short period of time. So if you're going to short the stock, you're measuring from the high at the very top of the candle as the evening star is showing up. And what you want to do is after it makes its move, you're lowering your stop or you're lowering your price alerts down so that you're more or less protecting your profits along the way. Not everyone is shorting the market, but there are a lot of folks that are trading options that buy puts. And that's what I do. I buy directional puts when I'm bearish on a particular stock. A lot of times I'll go with long calls if I'm bullish on a stock for a short period of time, like we see here on that morning star. And so that is our Technical Tuesday lesson for today. Stay tuned. Make sure you click that subscribe button, hit the notification bell so that when the Technical Tuesday educational videos come out, you'll be notified and you won't miss them because they don't always show up on the menu. And of course, when you leave comments and you hit the like button, that always helps us get on the menu for other people to be able to find us. And we appreciate that very, very much. So that is it. You have a good rest of the week, and we'll talk to you next time. So long.